Well, this was a collective failure of the first order, not just of the supervisors and regulators, but obviously in terms of the banks, treasury departments, you name it. A lot of people are involved in this. But so far as the regulatory system here in the UK is concerned, we found that the tripartite system did not manage to achieve one of its prime goals, which is to maintain financial stability. Now, that's very obvious. A number of banks and building societies crash. As to why that was, it was partly because there was some ambiguity as to the respective roles of the Bank of England and the FSA in terms of what's called in the jargon macroprudential supervision. That's looking across the financial markets as a whole. And it was partly because the supervision that the FSA did at a microprudential level was perhaps not as rigorous as it might have been. Well, the Banking Act 2009 has set out this, or set up a Financial Stability Committee chaired by the governor in the bank. Under the Act, it is something which is non-executive and doesn't have representatives, for example, from the FSA. We believe that that's the right place to put responsibility for macroprudential supervision, and that it should have executive powers over a new policy instrument which would allow it to intervene when things were, as it were, getting out of hand in the financial markets. We also believe that there should be senior representatives from the FSA and indeed from the Treasury. There are two reasons for that. The first one is that we detected a certain amount of lack of communication between the three parts of the tripartite system in the crisis, and this would deal with it. And the other is we recognize that if the committee has an executive power, then it will be politically sensitive and the Treasury should be represented. Well, the credit rating agencies have obviously lost face in a big way and lost a lot of their credibility, and that needs to be dealt with. It is not a good thing if those rating agencies are not believed by the markets as a whole. And we suggest a couple of thoughts in that area, although we didn't take any evidence particularly on it. These are thoughts from the committee. The first one is that they might have their own institution, as it were, with their own policies, which would be made absolutely transparent and everybody would know where they were coming from. The second one is that they might have some kind of economic skin in the game, so that they would be seen to be tied in to the ratings that they make of various issues. Perhaps that they have to take a sliver of each issue and hold it to maturity. That would mean that I guess that those who were investors would have some kind of, of confidence that they would be rating things in an objective fashion. There will be a debate in the House, there always is, on a select committee's report of this kind, and the government is obliged to respond to it. And we shall look with great interest as to how they respond.